posted an inline set of numbers for Q3 FY21, while revenue and PAT came in line. Margin was slightly below the expectation. So, almost a mixed set or to an inline set of numbers is what we could call it. So, revenues came in up by 20.9% and came in at 11,862 crores, while the profits of the company were up by 18.9% to 19. So, that is 1,921 crores is what it stood at, the profitability of the company. Margin saw a contraction of 90 basis points and came in at 24%. Versus 24.9% on a year-on-year basis. Home care segment revenue, so that is home care segment, saw a decline of 1.4%, but it surely saw a sequential recovery, is what the management has also indicated. Beauty and personal care segment saw a growth of 9.4%, while food and refreshment saw an amazing growth of 79.9%. So let's talk about what has actually been the volume growth for the company. That came in at 4%, and surely that is in line with what the ET now expectation was as well. So volume growth of 4%, what the company saw and company reported. Now, the company overall saw a recovery coming in the out-of-home consumption category and the discretionary category as well, and the revenue pressure was eased out on those fronts and those segments as well. Health, hygiene, nutrition, which is around 80% of the mix, continued to deliver a strong double-digit growth, and obviously that was supported by the new launches also, which we saw during the last couple of quarters, as well as the price hikes which the company had taken during the Q3. So, market share gain in e-commerce channels and strong rural growth has mainly driven the revenues of the company as well. So a good performance coming in on the rural side as well, and we do know that rural is actually doing much better than urban areas, so that is something also that has led to a good growth for the company. Now, talking about margins, what is actually impacting the margins of the company is obviously the elevated palm oil prices as well as the tea prices, which have seen an increase in the last Q3 especially. That has surely impacted the margins, and that's why we've seen a contraction of 90 basis points in terms of the margins of the company. Let's talk about the management outlook, which did come in, and the management commentary. They did say that the near-term demand outlook is improving. They expect to see a revival in the urban demand as well, and they feel that India is on the road to recovery and economic activities has surely started stepping up, and FMCG market has surely seen a growth, and the growth has picked up in the FMCG industry as well. So all in all, the outlook seems quite positive and optimistic outlook, which is coming in from HUL. So all in all, a decent set of numbers coming in from HUL, a mixed set of numbers is what we would call coming in from HUL in Q3 FY21.